All right, very important update. So starting January 1st, 2022, if you sell anything, whether it's offline or online, and you are receiving payments totaling more than $600 through your Cash App, your Venmo, your PayPal, Apple Pay, or even your Zelle account, then you're likely gonna have to pay some taxes on it. Because in the hundreds of pages of the American Rescue Plan Act, there was a tax provision that lowered the federal threshold for issuing the 1099-K form to $600, which basically means that whether you are occasionally selling something that you own or you're actually operating a business, if you sold more than $600 worth of goods or services, then the IRS wants to see you at tax time. So in this brief episode, I'm gonna give you all the details and let you in on how the IRS will know about any of these payments that happen on these third-party apps. So be sure to like this video while the intro plays. Hey there and welcome to our channel. I'm Sean with Life Accounting, the accounting company that saves people from high taxes and low profits. Okay, let's go ahead and answer a few questions. Number one, what did the American Rescue Plan Act change as it relates to income reporting? So currently, and this is for the 2020 and 2021 tax year, the rule is that if you sell goods or services through an app like PayPal, then you generally will only receive a tax form, the 1099-K form, if you have at least 200 transactions totaling more than $20,000. Which makes it pretty obvious that you are actually doing legitimate business at that rate. But as I mentioned earlier, things have changed. And for the 2022 tax year, you may receive a 1099-K form on anything you sell over $600 with no minimum transaction levels, which is a pretty significant change and an increase of $19,400, which is a big move, right? Now, I want to hear from you. Comment below what you think about this. And while you're at it, don't forget to like this video if you enjoy updates like this one. Now, here's my take. Lately, when new laws pass, the headlines that we see on the news are typically around stimulus checks, tax credits like the child tax credits and grants, loans, etc. But the government is primarily funded by tax dollars. And when all these new enhanced benefits come into play, then really we are the ones that are paying for it. And it's moves like this one, lowering the federal thresholds, that help the government cover all the bills. Now, of course, this isn't a political video, but I know the Biden administration focused on taxing the rich, but this is definitely a tax provision that is targeted at everyone. Okay, so question number two, does this mean your taxes will increase? Well, if you get a 1099-K form, you should definitely report it on your taxes. But that does not mean you're going to actually pay more taxes on that income. Remember, paying taxes comes down to your total taxable income. So you have to take a look at what tax bracket you fall into after the standard or itemized deductions that you have. For example, if you're single and your only source of income was a side hustle or some type of side business that made, let's say, $10,000, then you wouldn't have to pay any taxes on that because you don't fall into a tax bracket after you take the standard deduction. And the math on that is actually very simple. You have $10,000 income minus a $12,550 standard deduction, which makes a zero taxable income. All right, question number three. How does the IRS know about your Cash App or even your cash transactions? So I already sent this update to a few people, and the first question I got was, how does the IRS know what's in my Cash App, and how do they know that it's actually income and it's not like a donation or a gift that I gave someone? So I want to let you in on two ways the IRS can find out that what you have is actually income. Of course, the first way, number one, is pretty obvious, right? It's through that 1099-K form. That form is sent to you and to the IRS. So they will have record of any income that you receive through that 1099-K. The second way is not so obvious, okay? So let me explain. Your income is someone else's deduction, right? Just like your deduction is usually someone else's income. So let's break this down a little bit more. So for example, if you receive a payment in the form of cash, you may be thinking there is no way the IRS can actually track that. But if the person you paid is trying to reduce their taxable income, then they will likely, and they should, write off the money that they paid you, which gives the IRS something to track, right? Like this person took a deduction, that deduction is your income, or your income is someone else's deduction. So of course, you never want to be investigated for tax evasion and end up going to jail over illegal tax strategies. Now, we have some videos coming up next that talks a little bit more about tax evasion, tax avoidance, and other things the IRS wants to take control over. So make sure you check out those videos coming up next, and I'll see you over there.